Hey everyone, it's Blair here. I hope you're having a great weekend. Here is this week's bearish version of the weekly video. Things are looking very clearly bearish across multiple symbols, and I'm going to give a quick tour of about 10 or 12 symbols today so you can see what I mean. And I think it's important to understand sort of the context in which these forecasts are happening. Because prices, of course, are very overbought. We've experienced record money printing lately. Everything is inflated. Everybody knows the money printer is slowing down, and time trades is reflecting that in the forecast going forward through March. So starting with the Qs, which doesn't have a particularly bearish orientation, but my general bearish call for a correction here of 10 to 20% across the board is based on not just the Qs, but it's based on multiple stocks that I'm looking at. So here we are with the Qs. We can see that the dominant feature really is this big pivot low on March 16th. That date will come up on a number of other symbols that we're going to look at. Most of the action is on the downside. Most of the forecasts are on the downside, as you can see here. I tend to discount a little bit these single spikes in one standard deviation moves, but it's the two standard deviation moves that really get my attention because those are more rare and also more accurate. And pivot highs and lows are also very rare. So when these start getting up over 30%, I pay attention. We've got a 52% probability of a pivot low on March 16th. But let's also keep in mind the nature of the QQQ index. It is like most indexes, market cap weighted. So it does allow for a lot of skew within it. And by skew, what I mean is a handful of high market cap stocks can exert a big influence over the value of the index. So that's something that was pointed out to me by a time trades user this week, reminded me of the fact that the Dow is price weighted. So it's not subject to the same skew, market cap skew that market cap indexes use. So what we see in the Dow is a cluster of two standard deviation down days here of about 30%. We've got 28%, 29%, and this is starting in OPEX week, January 19th, OPEX being our monthly OPEX being January 21st. And then the following Monday, January 24th, the day after, the first trading day after OPEX, then we see another surge in down pressure, and the big pivot low on the horizon is February 3rd, but there's a secondary one over here on March 11th, kind of roughly matching up to the QQQ pivot low date. So we can start to see the outlines of a couple of waves down here in this extended correction that I believe we are entering into. So let's take a look at spiders. So with the spiders, again, we've got a big 77% probability of a pivot low on February 3rd. So that is really the dominant feature here. We've got a pivot high on January 27th. But that's 41%. So I think the big feature that's really going to be driving the forecast and the direction over the next little bit is this big pivot low on February 3rd in the spiders. Let's take a look at IWM. Okay, so this is the Russell 2000, so small and mid caps. Again, we've got January 28th popping up as a big date. That kind of late January, early February keeps showing up, as well as a big move down on January 24th. So this is the week following OPEX, when a lot of that volatility reduction that tends to happen, especially on the Friday OPEX day, that is released in the week following OPEX. So that tends to be the the behavior where we might get 1 or 2 big move days during the week of OPEX, but the following week is often where we see a lot more volatility. So this is true with IWM. Okay, now let's go and take a look at some of the stocks that make this up. Apple's forecast is particularly clear, and it's not a happy forecast if you're long Apple. February 23rd, we're looking at an 89% probability of a pivot low, and it's almost unanimously down heading there. There's a few little up spikes of minimal probability between now and late February for Apple, as well as another pivot low coming up January 19th. But this is about as bearish as it can get in terms of time trades probabilities. Let's take a look at Amazon. So when we look at Amazon, again, we see this cluster of 3 big pivot lows, getting increasingly confident in probability, with the big one being February 16th over here. So there's some earlier ones as well, January 28th and January 20th. So again, this late January stretching into mid-February time range looks really quite bearish when it comes to Amazon. Let's take a look at Google. Okay, so Google starts a little earlier. We've got big pivot low here, January 19th, followed up by January 28th with some lower probability moves up in that time frame. Sometimes when we see these hollows or these gaps in the down pressure, that can often translate into a move up. Maybe it will here because we've got what I would call a pretty good setup with a pivot low January 19th, followed by an up day, followed by a pivot high January 27th. But again, we don't know at what price level this is going to happen. This could be just a correction in a broader bear market. That's what I believe is going to happen. And then we can see evidence the broader bear market is going to resume, particularly after February 25th here, with the 65% probability of a pivot high. We've got a big cluster of moves down right around a pivot low in early March. So again, March 16th. So we're looking at basically an extended time period here between sort of late January and mid-March, where there's very little reason to be bullish. Let's take a look at Microsoft. So again, Microsoft, lots of forecast probabilities move down, and the biggest pivot in the near future is that March 16th date again. Let's take a look at NVIDIA. Okay, so NVIDIA, again, cluster moves down in late February, and that mid-March date again with a couple of pivots around March 15th, March 16th, okay? There may be some moves up here heading into this pivot high on January 26th. We don't know at what price this will be. It could, go down and then up here, and it could peak at a lower price. We're not sure, but there's a pretty good chance of a pivot high on January 26th for NVIDIA. Okay, let's take a quick look at financials before we wrap up this week's video. We're going to look at XLF. Financials have been surging the last week or so. I believe that's due to the steady increase in rates that we had last week. So rates are going up, and if you're in the business of selling money or renting money, which banks are, then that basically means your margins are going to be expanding. So banks have been benefiting from that. However, it seems to be a short-term benefit. We've got a pretty significant cluster of moves down coming up starting January 18th. And this is accelerating the week into OPEX with fairly big 42% probability of a 2 standard deviation move down. And this is coupled with a big pivot low on February 2nd. So it looks like a pretty, maybe even a pretty bearish forecast for financials starting the OPEX week. So, and then accelerating into the week after OPEX. So you would think with all of this bearishness that bonds or safe havens would be getting a bit of a boost. And we do see that here on the time frames forecast for bonds. January 21st, we're seeing a nice little cluster of moves up right around a pivot high. Now, just because this cluster stops doesn't mean the move up will end. It can continue going up. But then the next biggest pivot that we see down here is March 18th. So again, we don't know at what price this pivot low is going to be. It could be way up here. It could be way down here. But it does give us an indication of what we can expect directionally when it comes to bonds. So it looks like this move up in bonds is really going to accelerate kind of after this pivot high happens on January 18th. So it's shaping up to be a very interesting OPEX week, and especially the week after OPEX. So personally, I'm going to be positioning for this, and I hope that you found this information useful, and I hope that you can appreciate just sort of the speed at which that I can review multiple symbols and get an opinion, formulate a trading direction and strategy just in the few minutes that I've been doing this video. We covered about 10, 11 symbols here, all relatively quickly. And I think that's one of the biggest strengths of time trades, is just to be able to type in a symbol and get some probabilities within 30 seconds or less. So if you're new to time trades, I'd encourage you to check out the user guide. I'm going to include a link to the user guide here. So that's probably a good start for you to understand a little bit more about how it works and where these numbers are coming from, how they're generated, and why I think they can provide an edge in your trading. And with that, I'm going to sign off. Thanks again for watching this video. Good luck in this week and coming weeks, and hopefully we will all be consistently profitable. Thank you. Bye now.